What's up, Denver? Chris Lopez here, and today's deal analysis is not a typical one. We're actually going to walk through a Fourplex 1031 exchange, but instead of being a normal 1031 exchange with a trading up, this deal analysis actually goes around doing a reverse 1031 exchange and going from a multifamily to two single-family assets. So not a normal transaction you hear. We'll go into the story, the details, and why it was a great move for our guest and investor, Jeff White. Jeff, glad to be back on the podcast, my man.
Thank you. Yeah, so excited to be back on the show and loving the new studio.
Thank you. Yeah, it's a fun spot. Getting into this because I find a lot of stuff you do fascinating, but particularly this transaction and the way you optimize your portfolio just very, very unique for the reasons I just stated. And I know this was not the plan, but this happened kind of towards the end of last year, I believe. Walk us through the story of how this came about, because it's one of those things where kind of one domino fell, then another domino, and all of a sudden you got more cash flow and more net worth.
Yeah. So basically the story goes, when I got my real estate license about a year and a half ago, sometimes I would just want to go see other properties nearby to see kind of get a feel for the market and different house hacking, rent by room, multifamily properties to kind of have a pulse on everything. So what happened was one day in June, basically late June of last year, I went to go see this large single family that was only 2 blocks away from where we were living. Built 1999 built. And I was so excited. I was like, hey, I got my wife, Suleika, to come by and check it out. And we're like, oh, it's so cool.
And you just went out there to check it out?
Yeah, just to show her. I was like, oh, what a cool one. This would be perfect for the right investor. And then she brought up the question, why don't you get it?
Why would it be perfect for the right investor? What did you like about it? Like, what was the high level?
Ooh,
this looks good.
99 build, over 3,000 square feet.
So newer, bigger.
5-bed, 4-bath, and you could add 2 bedrooms fairly easily on the configuration. New roof, new siding, repainted. Basically, sewer line is new. Deck was new. Like everything, it was pretty much rent ready condition.
Okay.
Yeah.
That makes sense. Obviously, room by room strategy is probably what you were thinking there.
Yep.
And so what did Suleika say to you that kind of started all this?
So she says, why don't you buy it? Now, then at first I was like, well, I can't because, I have to put investment property loans 20% down. I was like, I don't have, it was a $610,000 prop, $120,000 just laying around to buy this place.
And your timeline wouldn't allow for that.
Exactly.
House hack owner occupant.
Yeah, because we just bought our house hack number 5 May of last year. So we're only like a month into it. So there's no way we could call Joe up and say, hey, can we just move into this one instead? So that was out of the picture. And then basically the wheels were in motion. I was like, wait a minute, technically, why don't, she also brought up, well, since you can't come up with that down payment, how about you just sell your worst asset? And then I was like, yeah, that's true. But then I have to pay taxes on it. So the idea became, why don't I just do a 1031 exchange?
And so what I want to kind of pause here, it's really cool how it's like mindset and some perspective on here. I mean, hats off to Suleika for kind of being like, hey, let's change the mindset here. And what you're saying is hey, how can I do this versus I can't do it? And that was very much the attitude. She kind of got that triggered. And then you start, hey, how can I do this? And that leads you to looking to sell your first house hack,
yes,
which is a Fourplex. I know we've talked about in different podcasts and videos in the past, but you bought that Fourplex 2017?
Yep.
Okay.
Yeah, and so we owned it 4 years at the time, and it's been our most expensive to maintain, highest upfront cost to get it rent ready. That's the one that had cockroaches, mold issues, radon, like everything you could think, purple carpet, door jams, everything you could think of. That house had, we did everything. We had high gloss paint in the whole entire basement. So we had to repaint the whole basement.
Oh, wow.
So that one was the best learning experience, but also the most amount of money to make it rent ready, and then ongoing maintenance because of how old it was and how run down, all the deferred maintenance over time. So, and the cash flow because of the other couple of units were still not fully renovated, we were getting like below market rents.
So you're under rented on 2 of the units?
Yes.
Okay.
And that's why the cash flow, if you see the blog post, was pretty, it wasn't terrible, but it
was like what, $300 a month, $350 a month or so?
Yeah, but basically you'd expect, I guess, a multifamily purchase in 2017 to have way better cash flow based on the purchase price back then. But this one did not. And actually, I would say it was a negative alligator type property because of the maintenance costs of like clean out the sewer lines multiple times a year. Sometimes it would rain, like water would leak through the old windows in the basement, and I had to help with that issue or send like a plumber over, and just basically garbage disposals going out, like just like every little thing you can go wrong in that place. It just seems like an ongoing maintenance request.
And this is like, a very common thing investors go through is like, hey, what is my headache property? What is the worst performing asset in my portfolio? And it's not always, hey, this is the worst numbers or this is the biggest headache. It's often one or the other or a combination of the two on here. So big headache and not one of your better performers, from what I know about your portfolio. But walk us through here. What was the amount of equity you had seen in the property? Because that is what matters.
Yep.
And there has to be a certain amount of equity to make a 1031 trade up worthwhile. Otherwise, it's just a waste of time and you pay a bunch of fees and transaction cost and don't get anything better.
Exactly. It was about $200,000 of equity.
So $200,000 in equity. Yeah. And you bought this with a FHA loan.
Yep.
So you put down, I think it was like 6% you said, or 7%?
Yeah, because of that
self-sufficiency.
Yeah, so it was a little bit more than
So it's still a very, very low down payment.
Yep.
And now that had snowballed probably a $40,000 or $50,000 down payment, snowballed to $200,000 in equity or so.
Exactly.
Okay, and so that was partly appreciation, partly work you done, but end of the day, $201,000 in equity.
Yeah.
So when you realize this, what was your game plan for doing a 1031? Like you saw this property, the one you wanted to buy, this potential 6-bedroom house. You saw this. Market was still very hot back then. I think this was Q3 of 2021.
Yep.
So about a year ago from when we recorded this. So market was very hot. We're very competitive offer. So speedy, you have to move fast. What was your thought process and how did you move fast?
Yeah. So my thought process was basically thinking like I had to do the traditional way of selling it and then waiting till I sell it to purchase the replacement property. But because of the time in the market, I was like, when I talked to the 1031X people, they said, yeah, you could, if you get it under contract and you make a contingent on you selling another place, you could close the same day. So I was like, okay, let's see if they take my offer of go under contract to purchase that 6-bedroom place and then list my property at the same exact time and try to find a buyer as quickly as possible and have the close date be the same day.
I'm surprised they took a contingent offer like that.
Yeah,
I mean, that's not normally like the best strategy to get property under contract, back then.
Right.
Today might be a little different.
Yep.
But back then that was really tough. And so how long was the property in the market before, like, I want to get very granular here.
Yeah.
I'm jumping around. So how long was the property in the market before you made that offer?
So that property was on the market only 2 weeks.
2 weeks.
Before we put an offer in to buy it with the contingency to sell the multifamily.
And how soon did you see it after it was on the market?
We saw it about a week and a half afterwards. So we didn't see it right away. So it was still on the market for about a week and a half.
So in a matter of 5 days or so, you went from, hey, I can't do this to, oh, I can.
Yep.
Here's the offer. Bye-bye Fourplex.
Yeah.
Yeah.
Very simple. Yeah.
That's a
quick decision.
Yeah. Well, but and that's where, you have years and years of experience and knowledge where like you can do like, oh yeah, hey, that decision makes sense.
Yeah.
So walk us through the mechanics of that, because you end up doing a reverse 1031, I believe, right?
Correct.
Yeah. So a reverse 1031, so everyone knows, is still a 1031 exchange, which helps you defer your capital gains, appreciation, recapture until, further down the road. But what you do is you buy the replacement property first, then you sell your relinquished property. So in this case, you're going to buy the house first and then sell the fourplex.
Exactly.
So from a high level, how'd that go?
From the numbers?
Just everything.
Okay. Yeah. So they accepted our offer because I told the story of like, oh yeah, we're about to sell our other place, and here's my pre-approval letter, so that they gave him comfort there. And so it's no problem getting the purchase under contract. So we put out the close date about 30 days. So now the clock starts right there. I had to sell the multifamily, before that 30-day mark. So I listed it, showed it, and then we got a strong offer, investor 25% down type of offer. So we're like, sweet, let's just do the close date the same day. So we'll sell it in the morning and then buy the other one in the afternoon.
So did you actually do reverse 1031 then?
Yeah.
Okay.
So it's the timing thing. So the sale price of the multifamily was $763. So with 1031s, as you know, you have to find replacement properties that are greater than what you relinquish or the property you just sold.
Yep.
So we had to find a property that's worth more than 763, but our purchase on the single family was only 610. So we still
you're
had
below that threshold.
Exactly.
Which then,
would trigger some capital gains and all that.
So
we're like, okay, well, we could use 20% down based on the net equity minus closing costs and fees. We could use the recycled capital to cover the 20% down for the purchase of the single family. And then we still had another 60 something K left for another property. So we're like, hey, let's go over to the Chris Lopez special to East Aurora condos over there.
3-bedroom, 2-bath condos for that price point.
Yeah. So, and 25% down for those. Yep. And that was a $240,000 purchase price. And same thing, we had a contingent on us selling it. So we put the close date to have all 3 transactions. Later on, I realized that it was more stressful on the 1031 company because it's multiple wire transfers. So the big lesson learned on that one was don't put them all together at once. It's a little tougher. You should just sell it first and give a couple days in between. But we just did it all in one day.
So I'm curious, why did you reverse 1031? Because if you sold...
Oh yeah,
you sold the Fourplex. Was that the first property that officially? So you sold that at 9 a.m. on this
Correct.
Friday.
Yep.
And then you bought the other 2 properties. Couldn't you have done a normal 1031 then?
Yeah, I think the person I talked to at 1031X was a sales guy, and he just sold me on like, oh yeah, you can do everything in the same day. So I just put the close dates for all 3 transactions on that day. But lesson learned, I should have done the sale first, like a traditional 1031, and then the purchases after that.
But I guess on the same day, if something fell through, the reverse 1031 is what gave you the safety net with months of buffer to go out there and buy something else.
Yeah.
So and a reverse 1031 costs a few $1,000s more than a regular one, right?
Yeah.
So you basically spend a couple $1,000s for an insurance policy to avoid paying a lot more in taxes than that. Is that a fair way to look at it?
Fair way to look at it, yeah.
Okay.
Oh yeah, and then total numbers, so 763 sale price, 610 for the single family, and then 240 for the condos. So total, we went from 763 to 850.
All right.
It met the criteria of doing a proper 1031 and deferring the capital gains and depreciation recapture tax.
Perfect.
Yeah.
And from a high level of numbers here, because I asked Jeff, and he did it so nicely, plugged all the properties in Property Llama. So we got some cool screenshots here, which will be in the show notes and up on the screen. You sold the Fourplex for 763. And you feel like that was fair market value, or did you have a few bucks off to just kind of like, hey, I get this done?
I did list it at like 785, so I took a little bit less just because to me that 20,000 is, I'd rather get into a better property long term than just wait for the perfect offer.
So can Jeff White of 2022 believe, or I say the old Jeff White, now looking at the new Jeff White, believe like, wow, 20 grand, because that's a down payment for a house hack, or almost down payment for a house hack.
Yeah.
Wow, I'm not too worried about that. Isn't like an amazing mental shift as your portfolio grows? Like, oh yeah, whatever, bigger opportunity here, less headache, I gotta do this.
Exactly, because it's just, and then long scheme of things, because all these properties, I look at it, I'm not necessarily going to hold them the 30-year time frame. It's going to be, the 5 to 10 year mark. But at a 1031, to me, I'm a cash flow investor. That's what I care about. And this transaction of changing my worst property, highest maintenance, worst cash flowing property to 2 newer properties that have basically rent ready to go and make it way better cash flow. And so to me, it was like, yeah, 20 grand. Do I want that? Sure. But I'm not, it's accomplishing my goal.
Yeah.
Yeah.
So I'm going to high level numbers here. 763 sales price on the fourplex.
Yep.
About 940 for the 2 new places you bought altogether. Cash flow went from like $4,200 a year to almost $20,000 a year.
Yeah.
So that is quite a big increase. So basically, what's that, fourfold? Actually, but probably a little bit more than that.
Yeah.
So a huge increase there. Cash on cash about doubled from about 5.5% to 10%, and your cap rate went from about a 5% to about a 6%.
Yep.
So all in all, it kind of follows the normal things where a trade up makes sense of, hey, you're buying a better performing rental, so a better cash flowing or better cap rate property, and you are also employing leverage. So you did 25% down on the condo, and what was the percent down on the house?
20%.
20% down.
Yeah.
So definitely maximize the leverage standpoint on there. So I mean, overall, increase the cash flow, got better rentals. Now, we're almost a year into this. Did this reduce headache and stress for you, which doesn't show up on the spreadsheet?
Oh, hell yeah. To say the least.
Okay.
So basically,
Podcast over.
Yeah, I've gotten one call on both these properties combined, and it was just someone got locked out. So I had to, and someone else had to come home, and like I had to get a locksmith, and that's one call in almost a year.
Between both properties?
Between both properties compared to almost every single, so what is that, like an hour of work?
Yeah.
Compared to the multifamily, probably every single month I had something pop up, or I had to coordinate with the tenants because no one's home, and it's quite like 50 hours at least for that one.
Yeah, and looking at the house, that is a room by room, right?
Yes.
I'm sorry, my question is room by room that you're self-managing.
Yes, room by room, self-managed.
So you self-manage all these properties.
Yep.
So very, very accurate thing. So that's really cool. So this is what's always fun about real estate, and this is why I like real estate more than the stock market. I think you do as well, is because this is really cool opportunity. There's always levers to pull, and the bigger your portfolio gets, the more properties you get, the more opportunities you have to optimize. Hey, I need to get rid of this. I could do this. I could do this. And that is exactly what you did. Got better rental numbers, reduced your headache. Win-win. Yep. And that is an end of the game where, like, it's a very important thing for investors to keep in mind, like, hey, we can look at spreadsheets, but man, even this property is best performing property in your portfolio, but it's the biggest headache. There's trade-off there. That's part art, part science in there. So going back, looking at this, is there anything you would have changed or any advice you would give to someone looking at a similar trade-up?
So I think it's with utilizing Property Llama and looking at your portfolio, like on an annual basis. You don't do it every single month. Reevaluate and see, like, hey, maybe we all have our best properties and worst properties. What are some of, just reevaluate every single year and take an inventory of, can I replace this property? Seems to be a headache. I can't attract good tenants. Can I trade up to a better performing asset? And the answer usually is yes. Whether it's going from single family and multifamily, single family. To me, it doesn't really, I care about cash flow, so it doesn't matter if it's multifamily, single family, condo, I just want best cash flow. No. So that's what I care about. So I have no problem downgrading from multifamily to a single family and condo.
The one thing, though, is that it's not as good of a clickbait headline as going from something smaller to something bigger. But that is a very neat point that doesn't matter to your portfolio and your cash flow. So, Jeff, this is awesome. I mean, as always, like, I love seeing how your brain operates, what moves you with your portfolio, because you're just very dialed in. You're great at this. Anyone out there has questions, reach out to me, reach out to Jeff, go plug your properties into Property Llama. We love reviewing things, helping you out. That's what we do here at Envision Advisors. So, Jeff, I appreciate this help so much. Your contact details, these numbers will all be in the show notes. So thank you so much.
Thank you. It's been a pleasure.
All right, everyone, enjoy the details. And if you have properties out there, make sure you're reviewing your portfolio. You don't need to do it every day, but do it on a regular basis, especially right now where the market has shifted. This is a time to look at your portfolio and see what moves you can make that make sense to the market and also for your goals and your lifestyle. So we'll talk to you soon.